Get a ringside seat as BloombergQuint goes to the India Economic Summit. With exclusive sessions and panel discussion, 5th and 6th October, only with BloombergQuint.
Hello and welcome. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet D'Souza.
Hi, I'm Agam, Vakil, and here are the top headlines for this hour. Well, Indian equity in trades muted. Open interest remains little changed. India Volatility Index falls for the 5th straight day. But open interest in BEML and Adani Enterprises increases as traders take fresh long positions in their respective stock futures. And Pratap Snacks lists at a premium of more than 30% on the Bombay Stock Exchange. The Shoppers Stop gains close to 5% on the back of reports that Future Retail may offer to buy its subsidiary Hypercity.
All right, let's take a look at the markets. It's a positive start for the Indian markets, contrary to what SGX Nifty was suggesting in the morning. In fact, this is the 5th straight day that the markets are trading in the positive territory. Nifty up about 20 points at levels of 99.35. In fact, the India VIX has also fallen for the 5th straight day, and it is below that all-important mark of 12. Let's see if there is any sort of follow-on buying from these current levels. Bank Nifty remains in focus as Nifty Premium that's there on your screen. It's still maintained at about 15 points, which we saw at the closing yesterday. Bank Nifty, as we were mentioning, will be in focus. Today is the Bank Nifty weekly options expiry. Ahead of that, some sort of uptick now seen on Bank Nifty because it started on a very muted note, currently trading at those levels of 24,155. Let's quickly look at the options data then, what that's suggesting for Nifty. In fact, watch out for that 100-day moving average on Nifty, which stands at about 99.73. That's going to be the first hurdle for today's trading session. Pardon me, that's the 20-day moving average. In fact, if you look at the open interest action today, once again, there is a lot of put writing, which is seen for levels of 98 and 9900, which has also been seen in the last few trading sessions. On the put side, 10,000 strike has added almost 1.3 lakh shares. The 10,100 strike also has been adding a lot of interest in the past few trading sessions, telling you the upside as of now is capped at about 10,000 and looks like we've conveniently crossed the 9,800 mark on Nifty. For Bank Nifty for today, watch out for levels between 23,900 to upside can be at about 24,200. At least that's the option data, which so far is suggesting. We've seen a lot of call writing coming in for the 24,200 and open interest addition seen for the 23,900. That's the weekly expiry day today. Just quickly to take you through what the FIs have been doing in the last few sessions. Last 2 days, Agam, has been a bit of positive takeaway because the net long positions on the index futures have been going up. We started the series with 56. It's gone up to 58%. Even if you look at the option positioning, they've bought more of puts, written more of calls. But if you look at last 2 days trading sessions, they have been buying a lot of calls, in fact.
Right. Well, Navneet, I do want to address all the stocks which are in focus, especially in futures and options. But let's go across to Sumant, who is going to take us through the listing of Pratap Snaps. Now, we have seen, valuations on a relatively higher side, but it has still listed at a 33% premium to its issue price on the Bombay Stock Exchange. Hi, Sumant. Thanks for joining us. Tell us, what do you make of this listing?
So Pratap Snacks listed at a price of around 1250, which is what 33% premium to its issue price of 938. Now this is ahead of street expectations. Street was expecting a listing price of around 1200 rupees. Now if you see the valuations at 1250, the market cap comes to around 2900 crore, while the price to sales ratio is 3.2 times, while price to book is 12.3. Now the share prices have been rising after listing, and around at 1300 if you see the share price, the market cap crosses 3000 crore, while the price to sales comes at 3.4, while price to book at 12.8. Now at a listing price of 1250, the PE of the company is 296 times. Now the PE is so high because the FY17 net profits were hurt because of fluctuations in the prices of raw material. However, going forward, management is saying that these fluctuations in raw material prices would not affect the company, as they have changed their procurement policy, and they're expecting margins to be around 9% going forward, and this is versus 4.5% what they did in financial year 2017. Maybe this is the reason why the company has seen such a strong listing gain, seen such a long listing gain.
All right, Sumant, as we speak, the stocks crossed the 1300 mark, and I remember you were mentioning yesterday that the grey market premium was almost in that range of about 200 to 300, but currently stocks been trading above those levels of 360. Remember, the issue price was about 938, and at that price the market cap was almost 2200, which obviously has gone up today. The price to book was almost 9.2 times, and price to sales was almost 2.5 times, which obviously with the current market price, these return ratios will differ quickly. I just want to take a look at what DFM Food is doing, because that's the listed pair of this company, Pratap Foods, which a lot of analysts were of the view that the valuations have been on the higher side. In fact, if you look at the last 5 years CAGR, the revenue CAGR is good, 27%. EBITDA CAGR is also good, almost 10%. But look at DFM Foods, it has reacted positively. Some catch up with regard to valuations coming about. DFM Foods is trading with gains of almost 3.5% right now. But Agam, I think if you look at the bottom line, the CAGR of last 5 years has been negative, only 10%, which I believe last year in FY17, because of some crop issues, the profitability of the company went down. But so far, all good for new kid on the block. Pratap is listed with good gains of almost 35%. On that note, let's go across straight to our guest and get their views on the F&O market. Let's welcome our guest for the day. Abhijit Phatak, director at Define Edge Solutions, is joining us. And also joining us on the show is today Tushar Mahajan, who is the head of India Futures and Options at Nomura. Good morning to both of you, gentlemen, and appreciate you joining us today on BloombergQuint. Tushar, it's good to have you on our show for the first time today. Just want to get a check first. How is the setup looking to you for October series? There was a lot of weakness which was seen in last week, but a good recovery has been seen in the last 4 to 5 trading session. How do you see the markets behaving in the October series? Can we once again conquer the all-time high levels?
Hi, so I think what we saw towards the end of September series was a fairly healthy correction, which got a fair bit of weak hands out of the market, especially as the leverage position in the market kind of kept on increasing. Where we are currently, the market's kind of relatively lighter at this point in time. We are in for a phase of consolidation over here, and my sense is that for the October series, we'll probably consolidate ourselves in the 9,800 to the 10,000 odd band. It's a fairly tough psychological level, the 10,000 levels or the 10,200 levels to cross. And with earnings coming up later in this series, I would think at this point in time that might be a little early to say that we'll cross it in the series itself. But I think this is a good setup for a nice consolidation move between 9,800 to 10,000 odd levels.
Abhijit, should we see the Nifty close in the green today? It would be the 5th straight day when we will have seen gains on the index. How are you viewing trade on this index then, say in the near term?
Yeah, I'm looking at 99.70 on Nifty futures. If it closes above that, it will be very bullish. At the same time, 99.20 on the spot is also bullish as long as it is closing above that. Yesterday, it closed below that. So 99.20 on the spot and 99.70 on futures. At least these two levels should be crossed on closing basis.
Okay, that's the view coming in. Well, Abhijit was mentioning 99.70 on the upside, and that's what we've been highlighting for you, that the 20-day moving average of Nifty stands at about 99.73. So that's the first hurdle for Nifty in today's trading session. Tushar, today is the weekly options expiry for the Bank Nifty. And so far, what we've been observing in the last few trading sessions, the leadership has not been coming from the banking stocks, because if you look at the financials, they almost have 35% weightage on Nifty. Yesterday was all about Reliance, ITC, Sun Pharma. Where do you think the next leg of leadership will come in terms of Nifty stocks? And also tell us, what's the outlook looking like for Bank Nifty?
So I think while we can't ignore the performance of financials for the index to kind of move higher, it will have its role to play on the move on the index. But I think in terms of leadership for the next level, that in terms of sectors, our sense is that we should probably see leadership continuing to come in from the oil and gas space. So, you know, the likes of Reliance and the oil marketers, etc. And we should see some catch up on the pharma names as well, because I think we are beginning to see some decent momentum pick up on the pharma space, you know, with approvals coming through, with, you know, a fair bit of value buying emerging in those sectors. On the Bank Nifty specifically, you know, 24,000 to the 24,400, that's a fairly strong consolidation zone for the Bank Nifty. It kind of coincides between the 50 and the 100-day moving averages as well. And our sense is that you will see that, you know, 24,000 odd level to be a fairly strong support for the Bank Nifty. It's currently trading, I think, around the 24,200, 24,150 odd levels. And we could see Bank Nifty kind of inch up higher to the 24,400 odd levels, led by, you know, continued performance from the private sector banks.
Okay, so let's move to the options corner on BloombergQuint, and this is where we give you options strategies exclusively from our experts. Abhijit, I'm going to come to you. How are you playing the Nifty when it comes to the options, or for that matter, any other benchmark?
Yeah, Nifty is, I mean, if you take the resistance at 99.70 on the futures, right now it is not an area to go long fresh, but on any dip near 9900 futures or 99.20, it'll be a good trade to buy a 9900 or even a 10,000 call, which might be around 50-55 with the stop loss about 10.
Right.
Futures. That will be a good. Similarly, on Bank Nifty, it will be more because the value is there today, but at the same time, 24,050 is a good support. So any dip there should be a good buy call of maybe 500.
Tushar, just trying my luck here, if you could share any option strategy with us. If somebody, let's say, has to take a position for the October series, what kind of strategy would you recommend our viewers on Nifty or Bank Nifty?
See, on Nifty, I think what my co-guest also said, I would kind of agree with that, given that you would want to take a leverage bet on a potential upside move on the index, while our thought is that, you know, 1,900 to 10,000 odd is a range for this series, I would rather go and buy some options on the 10,000 strike for now, because if there is a breakout, you know, it could be fairly sharp and swift to move beyond 10,000 to the 10,200 odd levels. So, you know, from a target point of view, it's pretty much, you know, like a 1:4 payoff if we get past the 10,000 odd level. If you get the options today at 50-55 and it goes up to, you know, 200 rupees at a 10,200 odd levels, given that overall volatility is low, it might be a prudent strategy to just go out buy naked options on the 10,000 odd levels.
Okay, Tushar, you know, considering we have got your views on the benchmarks, you know, done, I also wanted to know in which area of the market or what sector or, any segment that you see a lot of accumulation towards the long side or the short side that you are going and initiating positions, or you're advising your initiation of positions in this market right now?
You mean which sectors, so to say?
Yes.
So I think clearly on the long side, our interest is across the entire spectrum on the oil and gas space. We are beginning to see some cool off on the oil prices internationally. We've seen the government kind of pass off benefits, starting to pass off benefits on the excise duty hikes as well. So the entire space, across oil marketers, so HPCL, BPCL, IOC, all these stocks had come off fairly sharply in the last fall, in the end of September. And we think that these are sectors which are beginning to get ready for a move on the upside. And that's probably one pocket where we've got our eyes kind of closely tagged on. Similarly, even on the gas space, so the likes of Petronet, LNG, GAIL, etc., are names which are beginning to see action, and we think that from a short-term trading point of view, we could see these this space kind of hot up.
All right, so oil and gas stocks could see some sort of outperformance coming about in the next few trading sessions. We'll just address our viewer queries in a while, but before that, let me just highlight few counters where there is a lot of price action, and these are your F&O counters for the day. Indo count is one of your top gainers. That stock's seen good amount of surge coming about in today's trading session. Besides that, you've also got the likes of Adani Enterprises. You've also got stocks like Tata Elxsi, which are up and about in today's session. From the pharma space, which Tushar was also seeing, there could be some sort of value buying coming about. So you've got stocks like Aurobindo Pharma. So far, that's seen good gains of almost 3.5% coming about. And in terms of open interest build up so far, I believe Agam has already mentioned about Ramco Cement. So their OI build up is almost 11% so far. Just Style, Cadila Healthcare, Apollo Tires are a couple of other counters which so far are seeing huge amount of OI build up in today's trading session. So let's just pull up a Nifty once again and see where that is trading, because India VIX has been suggesting that volatility so far has cooled off, which touched those levels of 14 in last week. Okay, so markets currently at about 99.30. India VIX off day's low, I believe it's at about 11.6, but nothing to worry. It is still trading below that mark of 12, Agam.
Well, Navneet, you have been mentioning, and we have been talking and discussing the positioning of the foreign investors and how it's been looking at some amount of longs building up in the last couple of quarters. Tushar, I did want to come to you on this one. Given the fact that in the previous series, we had seen a substantial amount of short positions or bearish positions being accumulated from the FII standpoint, how are you observing this? Are you observing, firstly, a change at all in the way they are positioning themselves in this series?
Sure. So I think in the fall that ensued last week, for the first time in almost maybe 7 to 8 months, we saw FIs becoming net short on the index futures side. So that trend was pretty short-lived, and we've seen that that direction change to them going net long again. And in terms of overall positioning as well, what we are seeing is that while FIs continue to sell sell stocks on the equity side, on the future side we are beginning to see some small accumulation on both Nifty futures as well as open interest increasing on the single stock future side on the long side as well. So that trend which happened last week has obviously reversed. The gap is not too substantial at this point in time, but we are beginning to see that consolidation on the FI positioning on the open interest.
All right, so that's the FI setup looking like, but let's address a couple of viewer queries now, and let's see. You can write to us, in fact, if you have any query right now on Twitter, Facebook, or you can also call us on 022-4540-4141 with all your F&O queries, and we'll try and look at all those queries. But for the day, let's just check if we have any queries coming in. We'll just check with our producers. Okay, we've got some first query actually comes from Vikas Pawar. He's long on one lot of JP Associates October futures at a price of 18.5 rupees. He wants to know what should he do, and also I believe the stock is in the ban period. He wants to know what does that ban period mean like. Tushar would come to you. JP Associates is the counter where our viewer has taken a position in, and I believe it's entered into the ban period. He wants to understand what exactly that means, and do you think he's very much in the money? Should he book out his position on JP Associates?
Yeah, so the ban period on stocks basically means that in order to avoid excessive speculation in the market, the exchanges define stock-wide limits on how much the overall open interest in a position could, in a single name could be. This is a function of the volume traded in the stock, the free float available on the stock, the historical open interest that has sustained in the stock. When the stock crosses, when the open interest at the end of any day crosses 95% of the exchange defined limit, exchange places it in a band where you're allowed only to offset existing positions and not create fresh positions. Until that open interest comes down to below 80% of that market-wide limit, the stock continues to be in ban. So that is what a stock means in ban period, that no fresh speculative positions are allowed. You can only unwind existing positions. Given that JP Associate has had a decent run and the stock has come in the ban space, clearly indicates that there is a fair amount of long pressure. And since no fresh positions can be taken, the stock will only get out of ban period when these positions get unwound. So I think in that light, it is better to unwind your position at this point in time because there could be some selling pressure coming through the moment the stock tries to be out of ban period.
Okay, some very key pointers coming out there with respect to stocks which are in the F&O ban. And a lot of our viewers who have, suffer from this issue or aspect should be taking cognizance of what Tushar has told us. But moving on to our next query. Well, this one is from Ritika Surana. And she wants to know, well, she has long position in Reliance Industries and she wants to know what is the best way to go about it in futures or options. Abhijit, if you're with us, what can Ritika do with her long position in Reliance Industries? Should she book out or should she hold on?
No, Reliance is quite bullish even now and she can hold on with a stop loss of 800 in futures. As long as 800 is held, it can go higher enough to 840. In futures.
All right, so that's the view coming in on Reliance Industries, a counter actually, which has been pretty strong. It's a heavyweight in the index. Yesterday it was up almost over 3%. Today, still it is trading in the positive territory at levels of about 822. In fact, last 12 months, this counter has seen gains of almost 50%. Well, before we wrap on the show, let's also check what are the trading strategies that are being suggested by our experts today. Abhijit, over to you. Take us through your trading strategies.
Yeah, I had a buy call on Jet Airways, but it has already gone up by almost 3%. But any dip on it is a buy if it comes maybe near 480 futures, or if the 500 call comes near 12 or 13. That is a good buy, and I expect Jet Airways to go to 520, 525 in October series.
Okay, well, Tushar, you have told us about some interesting plays that you do see in the futures and options space, but anything that you dislike or you would like to go short on or avoid when it comes to Indian markets?
I think at this point, given the overall momentum seems to be on the consolidation phase to slightly upswing, I would rather play the long side story.
Tushar, you'll be playing on the long side, and will the counters be from the oil and gas space that you've been suggesting to our viewers today?
That's correct.
All right, so Tushar is bullish on the oil and gas space from these levels, and we've seen good performance from the oil marketing companies as well as from the likes of GAIL in the past few sessions. On that note, we'll thank our guests, Tushar and Abhijit. Appreciate both of you joining us today, taking us through the F&O market, how the setup is looking like, and also helping our viewers with regard to their queries.
Well, that's a wrap on this edition of the F&O Show. But up next is Harsha Subramaniam, who catches up with Sumant Sinha, Chairman and CEO of Renew Power Ventures. We will get you a slice of that conversation in just a bit. Stay tuned in.
Get a ringside seat as BloombergQuint goes to the India Economic Summit. With exclusive sessions and panel discussion, 5th and 6th October, only with BloombergQuint.
Thanks for joining us. I'm in conversation with Sumant Sinha, Chairman and CEO of Renew Power. Sumant, thank you so much for joining us on BloombergQuint. Let me begin by asking you about your own assessment of the macroeconomy. We have seen latest macroeconomic indicators turn the narrative of the India growth story from positive to negative. What do you make of it, and what's your assessment?
Well, I think that the macro is by and large good in terms of inflation numbers, in terms of fiscal deficits, and so on. I think where there is an area of worry is the GDP growth, which ultimately is central for all of us. And that is something that has been trending downwards for a few quarters. And the question is whether this is transient and technical in nature, or whether this is some sort of a permanent reduction in GDP growth levels. That is something I guess only time will tell. We'll probably have to wait and see for the next couple of quarters to see whether in fact after GST implementation the economy picks back up again, or whether in fact this is more structural in nature, which then will, the government will have to do something more serious about that.
What can the government do, Sumant? If I take the latter part of what you just said, we've seen government spending continuous for the last 2 years. Since 2015, 200 basis points of interest rates have come down. If there is a stimulus, what could that be?
Well, I'm not sure that a stimulus is the right answer, because it's not clear whether this slowdown is driven by supply side issues or demand side issues, or perhaps a combination of both. Now, if it's driven by supply side issues and you put in a stimulus that just increases demand, then that's actually going to be inflationary, and that's not really going to help anybody. At the same time, the government doesn't really have a lot of room at its disposal to be giving out a fiscal stimulus, given where its fiscal deficit numbers already are. To my mind, the solution here really needs to come from the monetary policy side. Unfortunately, the RBI doesn't seem to agree with this philosophy, but real rates in India are extremely high right now, and those do need to be brought under control. To my mind, if you ask me, I think that is the single biggest reason why economic growth is really slowing down right now.
Okay. You have a finger on corporate India and its sentiment. One area of concern, and we've spoken about it for a while, is the lack of investments. Government has expressed its concern that private investment is really not taking off. What can trigger that capex cycle?
I think a couple of things could. One is that we have overcapacity in the industry right now. So we are in some ways paying for the sins of the past, where we set up a lot of capacity. We recognize that in higher GDP growth numbers in the past, many years, and that is now coming home to roost, in a sense that we now have overcapacity and nobody really wants to invest. Demand, which should have been growing more rapidly, has not been growing as rapidly as expected, so that has been somewhat of a downer. And I think partly that's because interest rates are very high. That's depressing consumer demand, whether on the real estate side, and it is depressing investment demand as well. I think that what the government can do to bolster more investments is deal with the NPA problem more aggressively. I think that's also one of the reasons why interest rates are very high right now. I think banks are having to mark up a fairly significant amount in their margins to compensate for low lending rates right now, or low lending quantities, as well as the fact that there is very poor or that they have such high NPAs.
Sure.
And so as a result of that, interest rates aren't coming down. And that, as I said earlier, is depressing demand quite substantially. So I think if the government wanted to do something about it, which I'm sure they do, then actually dealing with the NPA problem all at one shot probably is the best solution. Whether you do it through merging the weaker banks into the stronger banks, whether you do it through letting banks go to the capital markets and raise a large amount of money, or whether it is privatizing banks. I think we have to look at some larger big picture solutions to try to address some of the problems that we're dealing with. And I think over and above that, the battle has to be fought by the government sector by sector. There is no magic bullet here. So every sector, they need to get in, resolve the problems in that sector, and move on. And that requires a very much of a in the trenches mentality of finding out what the problems are, why the corporate sector is not investing. And I can tell you that in every sector there are problems. For example, in my sector, I know what the problems are. I'm sure in other sectors also there are issues. And to my mind, some of these issues are governance related.
Sure.
Not so much the decisions the government has to take, but more the governance framework that we have as a country.
Okay.
And that's a more structural and long-term issue. But to my mind, unless we start dealing with issues at that very deep-seated and fundamental level, and as long as we have the same governance framework that we've had for the last 70 years, I mean, think about it. Since independence, our governance framework has not changed, right? And at some point, as the country matures, as the country becomes more modern, we have to look at some changes on that score.
Let me talk about your sector. The Prime Minister recently announced the rural electrification plan. While the goals and mission of it is quite laudable and ambitious, the details seem to be rather unclear. The DISCOMs are in no financial health to go ahead and buy power. Who's going to handle the last mile delivery, and how do players like you, the renewables, play a role in last mile delivery?
So look, renewables can actually play a role in that, because obviously renewables has this incredible advantage of operating at any scale. It doesn't have to be in the hundreds of megawatts. It can be in the hundreds of kilowatts and the hundreds of watts as well. So if you want to find off-grid solutions to power rural homes, renewable certainly is a solution, whether it's solar or wind or bio with some sort of microgrid frameworks, certainly can provide power to solve or address the Prime Minister's program that he's just announced. Having said that, the problem in our sector really is something that everybody understands, and that is the distribution sector. And distribution sector reforms unfortunately have not happened for the last 12-13 years. This government tried to come up with a new scheme called Uday, which was meant to improve the financial health of the DISCOMs. Partly has done that, but ultimately we have to reform the entire distribution side. I mean, think about it. Today, our distribution companies are owned by state governments.
Yes.
Okay. They do not have a stellar track record of having managed themselves profitably. As long as the population believes that it's our politicians that set power prices, politicians can never let go of that power. And I think that is the central problem. And so therefore, there has to be some way of breaking that logjam. And that could be through truly independent regulatory mechanism, which all said and done we don't really have right now, even though we've conceptually gone that path, but we don't really have it. So that is one thing that needs to happen. And the second thing that you can look at doing, or that states can look at doing, is actually again privatizing the distribution companies, selling them out, en masse, or they can actually separate the wire from the content part, which is something that the Prime Minister has talked about. So it's not something that is a new thing that I'm mentioning. It's something that certainly has been mentioned. So those are the kinds of solutions we now have to implement in the power sector, because there is so much suppressed demand in India. I mean, think about it. Today, the per capita consumption of power in India is 1/3 the global average. Okay, and the 1/3 of the global average itself is depressed because India accounts for 16% of the world's population. Without India, the world's average demand would have been actually 15% higher. Okay, and we are 1/3 of the global average, which includes all the poorer countries of the world as well. So we have to do something to get more power to our people. Now, I can very easily see that 1,000 kilowatt hours per capita, which is our consumption, doubling or even tripling. But that requires a lot of the suppressed demand, the latent demand in our economy, whether it's for industrial demand for manufacturing, or actual rural demand, or household demand with this load shedding that happens. All of that needs to come out. And it is not coming out because we have this layer of the distribution companies that is suppressing and would rather do load shedding than actually supply more power, because for every unit that they sell, they make a 50 paise loss.
Yeah. One last question, and this is about the hugely disruptive event that we've seen after DAM on GST. When you talk to businesses, what's the sense that you're getting? What are the operational challenges that businesses are going through?
Well, there are between types of businesses. You have large companies. The large companies, for the most part, with external advisors, consultants, etc., and with people at their disposal, are, I think, able to tackle the problem without too much of an issue. I think it's the smaller companies where there are problems, smaller, SMEs rather, which don't have advisors at their disposal, where the proprietor himself has to do form filling out and all of that stuff. And I think that's where there is a problem. And frankly, I don't talk to that segment of the market as much, so I can't really say what is the best solution for this. I think, look, whenever GST was going to be implemented, the reality is that there was going to be some disruption.
Yes.
And I think that's really what we're going through. Now, whether that disruption lasts for a quarter or 2 quarters, it remains to be seen. If the government, I think, comes in, solves the problems quickly, maybe the disruption is a little bit shorter. Otherwise, it could be longer, and that, of course, is going to hurt the economy in the long run. But it was always going to happen. Some disruption was always going to happen, and I think that's really what we're seeing. GST was implemented 1st July. It's right now sort of October, so it's been a quarter already. I think perhaps if it lasts a lot longer, then that's going to lead to a further slowdown in the GDP growth.
Get a ringside seat as BloombergQuint goes to the India Economic Summit. With exclusive sessions and panel discussion, 5th and 6th October, only with BloombergQuint.